Happy New Year, traders. Welcome back to Price Plan Profit, where we don't chase and we don't guess and we don't gamble. We build a plan and we trade it. Today, we're talking about how to trade the first quarter of a brand new year because every January, I see the same thing happen. Traders come back from the holidays excited, overconfident, and they blow up weeks of progress in the first few trading days. If you've traded through a December, you know that they can be weird. There's lower volume, holiday chop, and maybe a random Santa rally, but almost overnight, January turns the lights back on. Volumes flood back in, volatility spikes, and funds reposition, sectors rotate, and your old habits get exposed. Most traders make two fatal mistakes in Q1. Number one, they assume that the market will just blindly continue last year's trend, buying the same setups even when the character of price has changed. And number two, they try to start the year strong by sizing up too early, forcing trades instead of letting the market show its hand. This video is your antidote to that. I'm going to walk through exactly how I approach Q1, the macro picture I care about, the specific execution adjustments I'm making for SPX, and the one rule I want you to carry for the rest of 2026. So if you've ever started January hot and then watched your P&L bleed out by the middle of the month, I want you to listen closely. Let's start with the bigger context that will drive every candle you watch. Before we talk entries and exits, we have to ground ourselves in the environment that we're actually trading. Take a look at this SPX chart from the end of 2024 through the first quarter of 2025. The first quarter of every year brings a specific set of forces: new fund allocations, tax considerations, earnings season, and a fresh round of economic data. That creates a push and pull between New Year's optimism and data reality. So here is how I simplify it on my charts. I'm asking three specific questions on the daily and weekly time frames. Here you'll see a current chart of SPX with the 2025 resistance area shown. So the three questions that I asked myself: where are we relative to last year's high? Are we pushing into a prior all-time high? Are we breaking out into blue sky? Or are we stuck underneath a massive ceiling? This tells me if I'm looking for trend continuation or a rejection. The second question I ask is, where was the last battle? I'm marking out those high volume consolidation zones, the ranges where we chopped for days or weeks. Those areas are now your key support and resistance for Q1. Price has a memory. Also, what is the slope of the trend? I don't worship moving averages, but the 50-day and 200-day will tell us a lot if we are in an uptrend or a downtrend or a messy transition. Don't fight the slope of those moving averages in the first quarter. We also have the January data cluster, non-farm payrolls, inflation prints, and the first Fed meeting of the year. I'm not here to predict those numbers. I'm here to tell you to expect volatility around those dates. My job isn't to guess what SPX should do. It's to let price show me if we're accepting higher prices or rejecting them. Once I have that context, I switch to execution mode. So, in execution mode, this is where price plan profit comes to life. First, price. Everything starts with the levels. On SPX, I have three zones marked for January. I'll show you those soon. The first zone is the resistance zone. That is usually a prior high or a weekly supply level. This is my no chase zone. Then the support zone, that high volume consolidations where buyers stepped up last year, this is my potential buy zone. And the invalidation zone. If price breaks below and holds below this, my bullish bias is over for the time being. Now let's talk about the plan. I'm going to break my Q1 execution into three specific playbooks. Playbook number one, the breakout with confirmation. If SPX pushes into resistance, I never buy the first breakout. I wait for confirmation. That would be a break above the resistance zone. And then on a retrace, does that zone now hold as support? If it does, then I am looking to go long on that previous resistance zone and trim at my targets. My stop goes right below that structure. Playback 2 is a buy zone reversion. If we rip vertically into resistance and I see signs of exhaustion, such as big upper wicks or lower highs, I'm not going to just blindly buy a dip. But if that structure breaks, I look for the bias to reverse back to my closest buy zone. It is about in the middle of that range. And my target becomes the resistance area again with a tight stop just below the range. And playbook 3 is the support test. If SPX sells off into my support zone, do we slice through it like butter? If so, I just stay away. But if we slow down, base out, print a higher low, and I get the break above that candle, that is where I look for a long. Again, on confirmation, not hope. Finally, profit. To survive Q1, I make three adjustments to how I manage my profits. I reduce my position size for the first couple of weeks in January. I need to fill out the new volatility. Number two, I limit my trades. What I mean is, I have a max loss per day for the first couple of weeks in January. And if I hit that max loss, I walk away. And number three, I define profit targets before my entries. I am not deciding based on greed in the moment. That is the execution strategy. Clear levels, three playbooks, and tighter controls. If you only take one thing from this video for the entire year, let it be this. Do not let one day or one week define your year. It sounds simple, but this is why people fail. Here is the rule that I want you to write down. In Q1, I will never lose more than blank in a single day. You pick the number that makes sense for you. It needs to be an amount that will not blow up your account, but also won't blow up your emotions, causing you to hesitate or trade out of revenge or fear. For me, this rule sets above everything else. It doesn't matter how perfect the setup looks. It doesn't matter what Discord or anyone else is saying. If I hit my max loss for the day, I am done. The traders who survive 2026 won't be the ones who catch every breakout. They will be the ones who avoid the catastrophic drawdown. If you protect your capital in January, the profits will come as a byproduct of your process. So I want to challenge you in the first quarter of 2026. Let's wrap this up, all right? You don't need a crystal ball for 2026. You just need three things: context on where we are relative to last year's levels, a simple execution framework with defined playbooks, and a hard rule that protects you from yourself. Here's my challenge to you. For the next 90 days, all of Q1, commit to trading only with this structure. Map your levels on Sunday. Set your max loss. Ask yourself every day, did I trade my plan or did I trade my emotions? If you're serious about that, drop the words Q1 plan in the comments right now so I know who is locked in with me. And if you want to see exactly how I find those buy and sell zones on the chart, I want you to watch this video right here. It breaks down the technicals in detail. Trade with structure, protect your capital, and I'll see you in the next video.